Hello, income investors. Welcome back to the channel. This is Harvesting Income channel. This is where you learn how to make your income and grow your income. Okay, today we are going to talk about a all-in-one commodity covered call ETF. This is known as the CMCC, the GlobalX all-in-one commodity covered call ETF. This is basically like a one-stop commodity income package or an income fund. So, what are the basic features of the fund? What does it contain? What are the different commodities? And what are the strategy? What kind of covered calls they write? We are going to unpack the entire thing and show you how this fund works and what are the different features. So before I go ahead, quick disclaimer: this video is only for entertainment and education purposes, not a financial recommendation. Okay, with that, quickly let's go into the CMCC ETF. I have it in the CMCC ETF column that I've highlighted, the middle column. So this is like an all-in-one commodity covered call ETF. I'll just explain to you the main features here. Like if I need to access some information, I'll go back to the website. But most of the information is here. Basically, the fund is meant for holding precious metals, energy, and base metals. That's the whole premise of the fund. So the reason why they do that is they want to provide a diversified access to various commodities for investors so that they don't have to jump in from one commodity to the other or maintain different funds or ETFs or try to rebalance it. So it's going to be very complicated because there are dozens of commodities available. So this fund will hold all the different commodity ETFs from the GlobalX fund, and they hold different commodity ETFs into one fund. So you get a diversified exposure all in one package. Okay, that's the whole premise. And they write covered, and for each fund, like within each fund, they have covered calls. So the gold fund has gold covered calls, silver fund has their own covered calls, the copper and energy ones, they have their covered calls. So holding all these covered call funds provides income to this fund, and that comes to you in the form of distributions. So that's the whole model. The writing style of the covered call writing style is basically more dynamic at fund manager's discretion, like I mentioned here. So they write calls on the individual stocks. So unlike other funds which write calls on the S&P 500 or any other index, this one writes calls on the specific stocks. So you get higher premium income, and the fund manager can decide how much or how less they can write for each stock. Like so, it's very dynamic. So coverage again, like I mentioned, it varies up to 50% is what they write, which means that maximum writing level is 50%, which means rest of the portfolio, 50% of the portfolio has full upside, whereas the 50%, is involved in call writing. So good amount of income plus also good amount of appreciation. So you get a mix balance of both. In terms of the writing part, uh, the portion where they write calls, that's where the moneyness comes in. So in terms of the moneyness, the GlobalX fund, this fund particularly, writes out of the money calls, and other GlobalX funds also do this. But there are some exceptions, like there are some older funds where they do at the money calls. In this case, they do out of the money calls, which means they write calls above the current market price, substantially above, like 5%, 10% sometimes. So that can vary depending on the market conditions. But that provides you additional scope for appreciation within the covered call portion of the fund. So you get appreciation on the uncovered part and in the covered part of the fund as well. So at least 50% of the portfolio gets full upside, and from the other part of the portfolio, you get appreciation from the out of the money calls. So that's the appreciation part of it. Fund was started May 2026. So whatever numbers or information you're seeing here, take it with a huge grain of salt and keep tracking the fund for some time until you decide to invest. Now the fee for this fund is 0.65 plus tax, and expense ratio is yet to be determined because it's a new fund. Fee is reasonable, I would say, in my view so far, because it has a dynamic call writing program, and they do calls on the individual stocks. Remember that. So you're paying for that service, and it's really worth the money. And price is 18.41. Monthly distribution is 18.5 cents. So roughly based on this in distribution, assuming this distribution will be consistent, the yield will be 12%. I mean, this is based on the assumption or based on the projection. So we don't know yet what the exact yield will be. Like this is what is projected for 1 year. So far, everything looks good, and the yield is also good. Not too high, not too low. It's decent. And the good news is it is giving you enough room for upside potential. So that's the advantage of this fund. Let me quickly go to the website and show you the portfolio. So this is the CMCC. I will go to the holdings. You can see on the left side of your screen, top holdings. GlobalX oil and gas, you have that around 27.5%. GlobalX gold producers around 22%. GlobalX copper producers 21.6%. Silver miners 8%. Lithium another 6.8%. Uranium 6%, and so on. You have a few individual stocks as well to cover the other areas of mining or materials. So these are top holdings you have. So you can see that under each one, like the oil and gas is a covered call fund, gold producer is a covered call fund. So they are holding their own covered call ETFs. Basically, it's a fund of fund format. The only exception would be the global lithium and battery ETF, which is a regular ETF, not a covered call fund. And there are a few individual names as well. And you can see that the sector allocation is base metals 27% and precious metals 33.9% and 39% for the energy. So majority is into energy, and then you have the other metals. You can see the geographic as well, like fairly diversified across Canada, US, Britain, and other countries. Majority is into Canada, and another big chunk is into US plus other countries. So fairly diversified, fairly well managed. Yeah, you can see the dividend uh, declaration about 18.5 cents. This is the latest one, but in the future we have to see how well this will perform. Okay, now we have seen the CMCC. I will go to the CMCL summary because it's not much different. The only difference is the leverage. We'll go back to the summary to show you the quick facts. Like strategies for we look at the CMCL leveraged version, which is on the right side. In terms of strategy and writing style, it is similar to CMCC. The coverage and moneyness is also similar. No change here. There may be change in the appreciation because of the leverage. There may be more appreciation. And the fee is 0.85% plus tax. MER to be determined, but obviously this will be higher because of the leverage factor. And you also have the price 17.81. And here the model is a little different. The distribution is 11.6 cents for semi month. So they are paying 11.6 cents every biweekly, So basically they pay twice a month. So if we look at this pattern of payment, like you will get like around 23 cents every month, and that would be, if you divide that by 17.81, you get around 15.6% yield. So if you look at the two numbers, like in the CMCC, you're getting 12%. CMCL, leveraged version, you're getting 15.6%. So basically, if you do the math, rough math, like here, you know, 12% times 1.25, roughly, yeah, it comes to 15%. Yeah, that's why you're getting, slightly higher return because of the leverage. So those are the, basic features of the fund. Um, we have to see how the performance is, the unleveraged versus leveraged. This is a fairly new fund, so let us wait and see how it performs. Uh, GlobalX has done pretty well on the gold uh, covered call ETF, which is the GLCC, which I held for some time, and I like that fund. Uh, I hope that this fund will also perform somewhat similar to that in terms of appreciation and income, because the gold fund did well on both fronts. So I hope this fund also does well on both fronts. So if you're holding any of these ETFs, please share your comments and your thoughts as well. So I like to understand from you how you choose this fund or what you like about it. Or if you don't like some features of this fund, please share that as well. So that will benefit the entire harvesting income community. And thanks a lot for watching. Happy investing. Have a great day.